Hi everyone and welcome to the weekly update with me, which is a market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had the dollar that's under pressure. Now that's come on the back of this Fed meeting that we saw last week with that dovish hike from the FOMC. Now that has put pressure on Treasury yields to the downside and also meant that the dollar index is now at the possibility of a head and shoulders top pattern. Although I don't necessarily think it's going to happen, I think this is still going to be playing out as part of a sort of corrective move within the bull run higher. But still, I think there is that near-term downside pressure on the dollar. That's impacting across Forex markets, commodities, and also playing into equities to a certain extent as well. Now, we've got not a huge amount on the economic calendar this week, but we have a fair amount of Fed speakers, which are led by Janet Yellen. She's speaking on Thursday, and that will be a key factor, I think, that the markets will be looking out for. What sort of message will the Fed members be coming out looking forward? Again, obviously we've had that dovish hike from the Fed last week. What message will they be giving us now? Because we've had a significant repricing of risk repricing of that June rate hike. And what are they going to do now? It's back at around about 50-50 for that rate hike. So in terms of what we've got to look forward to, not a huge amount on the economic calendar, but there is a bit of UK data. Now, in terms of your Forex markets, we've seen the euro, which is gaining ground. That, again, combined with the dovish hike from the Fed, you had a slightly more hawkish than expected ECB, and that has sort of dragged the euro dollar higher. Now, what will that continue? There's a big resistance overhead at 108 to 108.50, and again that is sort of around about where the key marker will be in the sand for a possible base pattern on that euro dollar. So will that complete that base pattern? I'm not entirely sure it will, but that is a risk nonetheless. In terms of your cable chart, it remains in that big broad base in the trading range. You've got a lot going on in terms of Brexit, the Scottish referendum possibility, and also the outlook for the Fed. So lots going on to throw cable all around, but certainly at the moment the near-term outlook is turned positive. But will that again be another move that gets sold into? I think it probably will be. Now we've got also the dollar yen, which again is pulling back towards key support. Now once more, will that be a move that breaks to the downside? I don't necessarily think it will. I think ultimately dollar yen will be going higher through this year, and I think it will be sort of resolving this little trading range between 111.60 to 115.60, most likely to the upside. And I think that ultimately this move back towards 112.50 area, I think it's probably going to start to tempt a few buyers once more. So what we've got to look forward to on the equity markets, well, again, there's been a consolidation. The markets have been a little bit uncertain going into the Fed meeting last week. The Fed being more dovish than anticipated sort of gave the equity market an initial boost, but they've sort of started to track sideways again. They're all still in these uptrends. They're all still sort of holding on to their 21-day moving averages, but it still needs to continue to break higher. I think the next catalyst is likely to come from Donald Trump in these markets, but we'll wait and see, because it certainly hasn't been the Fed that's managed to break it out to the upside. S&P is holding on to its trend higher. 23.52 is the key support there. For the DAX, it's 11.895. The FTSE 100, 7.354 seems to be supportive. So we've got some key levels there that are still holding on all these equity markets. Now, in terms of your commodities, we've got that outlook for gold, which again has picked up. The weaker dollar has certainly helped to drive the gold price higher, but also this increasingly protectionist view of the world that we're getting from G20 over the last weekend still seems to be helping to support gold, and I think that could continue to be a bit of a theme through this year. But I think gold will generally still be a bit of a range play, a bit choppy for them now. I think it's pulling higher, but there is key resistance overhead around about that 12.40 mark that we need to consider. In terms of your oil price, well, I think oil again under pressure following from the continued supply glut that we're having. You had the OPEC oil agreement back in December. That has cut supply out of the market, but the US shale has taken up the slack and moving higher. You've got the rig count, which is growing every week. You've got the EIA oil inventories, which, albeit last week was a little bit down, still seems to be a real sort of adding supply back into the market, and US supplies are a big issue now for the global oil supply going forward, and that is a big pressure to the downside on the oil price. Now, in terms of your economic calendar, you've got the Aussie RBA meeting minutes on Tuesday morning, but the main focus I think will come in the UK inflation data. UK inflation and retail sales on Tuesday and Wednesday I think are going to be two important announcements that reflect how this whole Brexit app is going to be impacting on the UK economy. Inflation going higher, retail sales, because of inflation, retail sales coming lower. So I think that could be a theme that we get out of this week. We've also got these Fed speakers talking this week. We've got Janet Yellen on Thursday, but before that you've got, I think, Charles Evans, Neil Kashkari, and a few others as well to be looking out for. So I think that will be something that we are going to be seeing moving markets again throughout this week. But generally speaking, not a great week in terms of economic announcements, but I think the Fed speakers will again take some sort of priority in terms of how they drive the market. So with that in mind, I wish you good luck in your trading this week. Lots going on still as ever affecting these markets, and I wish you good luck in your trading. I'll speak to you next time.